Tesla's earning report is out, and it's bad. Tesla reports biggest earning revenue slide since 2012, announces renewed push for affordable model. Tesla reported a 9% drop in the first quarter revenue on Tuesday, the biggest decline since 2012, and missed analysts' estimates as the electric vehicle company weathers the impact of ongoing price cuts. Here are the results. Earnings per share, 45 cents adjusted versus 51 cents per share expected by the LSEG. Revenue, $21.3 billion versus $22.15 billion expected by LSEG. Revenue declined from $23.33 billion a year ago and $25.17 billion in the fourth quarter. Net income dropped 55% to $1.13 billion or 34 cents a share from $2.51 billion or 73 cents a share a year ago. The drop in sales was even steeper than the company's last decline in 2020, which was then due to disrupted production during the COVID-19 pandemic. Tesla's automotive revenue declined 13% year over year to $17.34 billion in the first 3 months of 2024. And not only is this bad, but it's expected to get worse, according to, unfortunately, Tesla themselves. Our company is currently between two major growth waves. The first one began with the global expansion of the Model 3/Y platform, and we believe that the next one will be initiated by advances in autonomy and introduction of new products, including those built on our next generation vehicle platform. This is the important part. In 2024, so this year, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023 as our teams work on the launch of the next generation vehicle and other products. In 2024, the growth rates of energy storage deployments and revenue in our energy generation and storage business should outpace the automotive business. Now, this makes it sound like it was some kind of a predictable lull, that they are here between two major growth waves. Like we had the first big one and now we'll slow down a little bit and then we'll have the second one. But that obviously is not the case. And you would know that's not the case by looking at the stock price. If that was the case, where it was a predicted lull between one big boom and another big boom, then the stock price would reflect that as people would still be buying in anticipation of future growth. But as you can see, year to date, that's not really looking like the case. It's down 41% year to date, and it's down just 33% in the past 6 months. It is not going particularly well for Tesla. And Tesla is, of course, trying to spin this to their advantage. And they're doing that by offering two major solutions to reassure investors that they're still worth investing in. The first is found here in this product section. It says, we have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start production in the second half of 2025. These vehicles, including more affordable models, will utilize aspects of the next generation platform as well as aspects of our current platforms and will be able to be produced on the same manufacturing lines as our current vehicle lineup. That specifically is very important, and we'll talk about why in just a sec. This update may result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. This would help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing lines. So Tesla's basically saying that they are going to be able to build more and more affordable vehicles in 2024 than they did in 2023. And most specifically, what's interesting here is says that they will be able to produce those on the same manufacturing lines as their current vehicle lineup, basically saying that they're going to be able to achieve more growth in 2024 than in 2023 at no additional cost, essentially because they won't have to build more factories in order to be able to do this. And this is pretty big if you're an investor, because you know the profits are supposedly possibly going to go up, but the cost is not also going to go up because they don't need to build new factories to do this. They can just use the ones they already have and crank out more and more affordable vehicles. Now, them talking about more affordable models might strike you as a little bit odd, considering that they trashed this idea just a few weeks ago. Exclusive, Tesla scraps low-cost plans amid fierce Chinese EV competition. This is on April 5th. Tesla has canceled the long-promised inexpensive car that investors investors have been counting on to drive its growth into a mass market automaker, according to 3 sources familiar with the matter and company messages seen by Reuters. Now, this could be incorrect, the report could have been wrong, the messages could have been fake, Reuters could have messed up their journalism, or this could have been legitimately uncanceled by Tesla. Maybe they saw how bad the reaction was by consumers, by investors, and by the general public and the PR disasters it was causing, and so they walked it back. In any instance, they're trying to create more vehicles at a lower cost to try and get customers more interested, and by association, investors more interested. The second thing that they're going to be changing is here. Our purpose-built robo-taxi product will continue to pursue a revolutionary unboxed manufacturing strategy. And frankly, I don't know what a revolutionary unboxed manufacturing strategy is. I checked the rest of the report. There's no other mention of robo-strategy or unboxed manufacturing strategies, so whatever that means, if you know, please let me know in the comments. Now, this shift to robo-taxis has actually been teased for a bit, including by Elon Musk himself as he tweeted out about it. Because of course he did, he tweets about everything, but Business Insider did this piece just yesterday, I believe, 2 days ago. Any hope for a cheaper Tesla model may be on hold for now, but what about a Tesla taxi for your troubles? And we're just gonna go over these key points here. Elon Musk teased details about a cheaper Tesla model just a few months ago, but as we know, that was probably scrapped. But this is the important part. Bloomberg reported Tesla has shifted to robo-taxis, which Musk said will be revealed in August. And to my knowledge, only the concept of them has been revealed. No actual test models are actually done to be reviewed by the public or seen by anyone, but there could be more on that coming later. The change in priority comes as Tesla reports slow sales and decline in revenue. See, basically Business Insider called it about 2 days before the report actually came out. Yeah, we knew that their deliveries were going down because the Q1 delivery report came out just a few weeks ago, and it looked pretty bad. So we could imagine by association that the sales were going down as well. And in addition to the robo-taxi, they actually put out this little teaser. This is what it would look like within the Tesla app to summon a robo-taxi for yourself. And you can basically say, hold to open the summon button. It tells you where the robo-taxi is. And these are entirely autonomous taxis, by the way. And then it tells you like the temperature inside and when it's arriving and where you're going and when you'll get there, yada, yada, yada. It's basically Uber, but Tesla-fied, I guess. And I believe the original intent was that you could be like at work or asleep and your Tesla could be going out and about earning money for you by giving taxi rides to people. I don't know if this updated version is that or if they're building an entirely separate robo-taxi that will be a Tesla taxi. Now, just being completely honest, I don't know if robo-taxis or cheaper models is going to be enough to save Tesla. I've talked about it before and I'll link it up here somewhere, but there are 3 main issues that are plaguing Tesla. First is that the infrastructure just really doesn't exist for the mass adoption of EVs. Anyone who lives in an apartment can't charge it overnight. Even most people that live in houses can't afford to charge it overnight because they'd have to install a charger, and most people are not really near enough to an electric charging station for that to be particularly convenient. Second is that the general interest in EVs has been waning over the last few years, and that's for all sorts of reasons that I just don't have time to get into right now, but the public interest in actually purchasing EVs is going down, and a lot of that is because they're not particularly reliable, and they're kind of expensive, but there are a bunch of other reasons for that, for other reasons as well. And the final reason is that Elon Musk himself is growing in unpopularity. Whether or not you like him is kind of irrelevant to the fact that he is actively doing damage to his brand. Surveys have shown that people are specifically less likely to purchase Tesla vehicles because of Elon Musk and how they don't like how he has perceived himself and put himself out there online. To be clear, I'm not saying that Tesla is dead or Tesla is failing. You're not going to get any kind of clickbait headlines like that from me. But what I am saying is that there's probably being a stock reset for Tesla as the price of their shares slowly comes in line with what they're actually offering as far as profits and revenue and future projection goes. It's been an overhyped stock for a while, so I'm actually not surprised that this slide is happening. But I don't expect the company to go under. But whatever happens, I promise to keep you updated. Thanks for watching.